Okay, good morning or good afternoon to everybody that is on the call today. We may have a few more people joining, but I always want to respect people's times and try to start the presentation as close to the top of the hour as possible. And certainly, if anybody misses anything, this is being recorded and will be posted to our website for anybody to watch in the future if they would like to review the update from this month. So, welcome to the monthly market update for the month of April. All right, we're going to be reviewing the information from this past month, March, and boy, has it been a doozy. Quite a bit of stuff that's been happening. So I suppose it keeps life interesting with things that are happening on the world stage. So, um, but before we get into that, I just want to go over a couple of things. So this is our monthly market update webinar. It continues our monthly session to discuss what is happening in the global and domestic economy and various stock markets and other types of markets, and to provide you with an opportunity to ask questions to me about what is happening, what you're hearing and seeing in the news and otherwise, and how it might affect you. In addition to this webinar, you should have also received in the invitation the market update quick hits, which is just a quick summary of the bullet points that apply to this month's report. You're also welcome to watch the video blog by Chris Fasciano. He is Commonwealth's chief market strategist, and he is a good resource for putting some of this stuff into context as it might apply to you. In addition to those webinars, so again, we provide those quick hits just so you have the highlights. You are also welcome to go to our website, www.leslieroperday.com, and click on the Market Updates tab. And that has additional information, both the video from Chris, as well as the quick hits blurb, both on a weekly and a monthly and quarterly basis. So you can go back and you can look at those. But certainly, if there's anything that you need some assistance understanding, you're welcome to reach out directly to me and we can review that together. Okay, so let's jump into it. Let's just look at the highlights from the monthly market update. Obviously, the biggest item in the news is the Iran conflict that we're currently experiencing. So the markets dropped in March on rising concerns about the ongoing hostilities in the Middle East that weighed on investors, particularly rising energy prices and interest rates during the month, challenged bond returns, and both domestic and foreign stocks ended the quarter in the red. Excuse me. Sorry about that. Okay. And then a couple of the bullet points, markets fall to end the quarter. So this was actually the worst quarter in, I think, the last 4 years, which is not surprising given the fact that we've had a number of strong years over the last couple. Fixed income updates. So rising rates create headwinds. So we had seen some falling interest rates over the last year or so. And clearly, this change in the Middle East pushed rates higher as there was more concerns about future interest rates. So certainly the war with Iran has taken center stage on the global geopolitical stage, has gotten most of the headlines. That doesn't negate the fact that there's other situations happening around the world, still have the Ukraine-Russia conflict and otherwise, but it does create some shifting risks as we now understand with the impact to oil, and we will talk about that here in just a second. So let's look at what's happened in the last month from a market standpoint. So if we look at the market performance for the month of March, pretty much all indexes were down across the board. The Dow Jones and S&P 500 were down about 5%, with the Dow down a little bit more. Interestingly, the NASDAQ, which is tech heavy, was down a little bit less than the S&P 500 and the Dow, down just 4.75%. The biggest loser for the month was the international markets, not surprising. That's the MSCI index was down 10.7%. So Europe, Japan, a lot of other large foreign country companies, the companies that are in that index, down a lot, primarily because of the projected cost of energy as it relates to the Iran situation. And then also bonds were down for the month, 1.76%, as interest rates ticked up about 0.5% on the 10-year Treasury. So 3.8 to I think 4.3 is what it rose to. So so by and large, kind of a sucky month for the markets and investors all around. Let's zoom out a little bit and look at where we stand from a year-to-date standpoint. So effectively, we have more or less lost most of the growth that we've seen since the beginning of the year, right? So year-to-date, Dow Jones is down 3.5%, and the S&P 4.5%, the NASDAQ 7%. International is relatively flat, and that's primarily driven by the fact that the international markets have been kind of the darling of the year, really the last 12 months or so. International has definitely been exceeding U.S. growth, but it's come back down to reality given the situation with the conflict in Iran. And then bonds are roughly flat, slightly negative for the year. If we just look at what has the market done since the February 28th attacks, you can see here that the sorry, I gotta get my slide there. So the market definitely suffered. We were down 7 close to 10% towards the middle of the month with that big dip in the middle. Started to come back as there were some indications of a drive towards a ceasefire. And then if anybody hasn't been seeing the news last night or today, the president announced a ceasefire, and that has caused the markets across the board almost entirely to jump, first starting with Japan and China and then through the US today. So today alone, the markets are up about 2.5% across the board, 2.5 to 3%, depending upon the market. So definitely a lot of positivity related to the potential for a ceasefire. And if we zoom back out a little bit further and just look at the overall 12 months, the past 12 months, so starting in April of last year, right? We're still actually in positive territory. So just kind of keep that in mind as we're looking at year-over-year performance. So the S&P 500 is still up, even as of today, or actually even as of yesterday. It was right now it's up 15.5%. It was still up even as of yesterday before the ceasefire was announced. We were still up 13-14% on the S&P 500. So the last 12 months has been, a pretty strong growth here from the markets, even despite the slump that we've been seeing for the first few months of this year, and particularly in March. Okay, so that's what's happening, has been happening in the markets. So I already kind of indicated those market performance. Now, a lot of the pullback over the last month has clearly been driven by the concerns about oil supplies and the lockup of the Strait of Hormuz, with the Iranians closing that waterway off and preventing much of the world's oil supply. I think it's estimated that around 20% of the world's oil supply passes through that water channel. So even though from the U.S. standpoint, since we are a net exporter of oil, we have more oil supply than we actually consume currently. Because of the fact that this is a global market, oil is a global market, prices are set by traders around the world. And so that has the immediate effect on raising U.S. oil supply, oil prices. And I apologize, I had that turned off. Have the immediate effect of raising U.S. oil prices and thus what we're seeing at the gas pump right now. Okay, so we saw oil prices jump from around $60 a barrel to almost $120 per barrel within the course of a few days, and that was clearly a shock. But these things do happen from time to time, and so while it's painful to see right now, and particularly when you go fill up your car, let's just cross our fingers that this ceasefire that was announced sticks. Maybe that will lead to lower, longer term prices. But even if it didn't stick permanently, I still would see that we would probably see some normalization of pricing once the situation becomes a little bit more stable and predictable. So. Now, also keep in mind that it has not stopped. So Israel is still attacking Lebanon. So there's still that going on. And anytime there's bombs dropping, no matter where it is, it's going to lead to some market concerns. All right. So if we take a step out a little bit and just look at what drives market returns over a longer period of time, just keep in mind that it's primarily earnings growth from corporate earnings that drives the stock market. So despite the fact that we've got these geopolitical risks that exist right now, corporate earnings have continued to be remarkably resilient and are still pointing towards strong growth for the year, even taking into account the fact that we're looking at higher energy prices. So if that, as long as these higher energy prices remain a relatively short-term phenomenon, and then meaning that they start coming back down over the next month or two, there should be little long-term damage to the global and the U.S. economy. If it drags on, if we do not maintain a ceasefire or we go back to dropping bombs and the conflict drags on, that could have some longer term damaging effects to the global economy. It's yet to be seen how much of an impact it's going to have on the U.S. economy. The inflationary effects of the oil will have a drag on effect, but I question whether or not it will drag the U.S. into a grinding halt, as some people fear. So the recent jobs report came out for March, and it actually came back significantly stronger than it was expected. Okay, so then we got to keep in mind that was for March. This was less impacted. The March jobs report was less impacted by what's happening in the Middle East. So could we see some effects in the jobs reports in the future? Yeah, we could, but I kind of doubt that it will be that significant. So the unemployment rate dropped to 4.3%, so slightly dropped from 4.4 to 4.3. And so while the jobs market has been more volatile lately on some concerns of an economic slowdown, this does appear to be good news, and especially in the midst of some bad news. So I say all that because that sort of leads an indication that assuming we see some settling with this international situation with Iran, we could still see the markets return to their growth path towards the middle or end of this year, assuming we kind of start to see some degree of resolution with that. And so, that puts the U.S. and the world still in a positive position to weather this and hopefully move beyond it and maintain a growth trajectory for both the economies as well as the markets. Okay. So with that, I want to just looks like we just have one person on today. So I'm not sure if there's any questions that you have. But if you do have any questions, I'm happy to take them at this time. If not, then I will just move on to what's coming up. And this is what's coming up. So the next session I'm hosting on the financial planning topics, our back to school series, is on Roth conversions, titled To Roth or Not to Roth, to convert is the question, happening on Wednesday, April 29th at noon Pacific. So this is all going to be about whether or not Roth conversions make sense or not. So we'll talk through some of the details and the things to consider when deciding whether or not to keep that money pre-tax or to convert it to a Roth, whether or not to make Roth contributions out of your paycheck or make those pre-tax or even after-tax savings. So all about Roth conversions is our next session. And so then the next, this says March monthly update. It's a little stale. This will be our May monthly market update. That will be Wednesday, May 13th, 2026. So at 11 a.m. Pacific. So you can put that on your calendar as well. And we'll see what happens over the next few weeks with this international situation. Should be interesting. So stay tuned. All right, with that, I will say thank you for joining me today. I hope you found this valuable. If you have any friends or family that think this would be worth watching, feel free to share it with them. You also are welcome to review it on our website or on our YouTube channel by clicking the Watch the Recorded link. And as always, if there is a topic that interests you, that you think that it would be good to do a session on, feel free to send me those ideas, and I'll see if I can get those in the lineup to present on. So with that is all I have. So I wish you all a wonderful April, and we'll see you again in a month. All right. Oh. Thanks a lot, everybody. Take care.